You're 21 years old. You're sitting at a sticky table in your college cafeteria. The air smells like cheap pizza and floor wax. Around you, hundreds of kids are aggressively highlighting textbooks, stressing over a macroeconomics midterm that might, if they are lucky, get them a $60,000 a year cubicle job. You aren't looking at a textbook. You're staring down at your phone screen. The number is glowing in bright, undeniably crisp green font. Up $1,200 in exactly 14 minutes. You look up at the kids stressing over their exams. You just made their entire weekly gross salary while drinking a stale iced coffee. You don't feel lucky. You feel like an absolute, untouchable genius. You feel like you just found a back door to the American economy. Let's rewind. Here is exactly how you got here. You had $10,000 to your name. It was your entire life savings. You scraped it together by working brutal, 90-degree summer landscaping jobs and hoarding every single penny you made. You knew that leaving it in a standard savings account was financial suicide. You knew that inflation was silently eating your purchasing power. But you also knew that putting it into a 401k to wait 40 years for a 7% return felt like a prison sentence. You wanted leverage. You wanted out of the middle class today. So you turned to the internet. The algorithm immediately fed you exactly what you wanted to see. You found a 19-year-old trader on Instagram. He was leaning against the hood of a matte purple Lamborghini in Miami. He had a Rolex on his wrist. He was talking about how college is a scam and how he makes 10 grand a day from his phone. He offered a private Discord community, $50 a month for his exclusive buy and sell signals. You paid the $50. You entered the chat. He told everyone to download an options trading app. At 9:30 a.m., right at the opening bell, he sent out an alert. Buy 0 days to expiration call options on a massive tech stock. You had absolutely no idea what an options contract was. You didn't understand Greeks, volatility, or market structure. You just blindly pressed the green button and bought the contracts. And it worked. The stock ripped upward. You sold 14 minutes later. Your $10,000 account is now sitting at $11,200. Your brain is immediately flooded with a lethal dose of dopamine. The chemical reaction in your head is identical to hitting a jackpot on a slot machine. You immediately start doing the toxic, invisible math that destroys every beginner retail trader. If I can make $1,000 in 15 minutes on the toilet, I can make $4,000 a day. That's 20 grand a week. I can drop out of college by November. You think you have discovered the ultimate glitch, but you don't realize something terrifying. You didn't just make a calculated investment. You just walked into a multi-trillion-dollar casino, put your entire net worth on black, and happened to win. And Wall Street has a very specific, very violent way of dealing with tourists. It is a Tuesday morning. 1 week later. Your account has grown to $14,000. You've hit 3 more winning trades. Your confidence has completely mutated into blind arrogance. You actually stopped copying the Discord guru. You think you can read the charts yourself now. You think you have a feel for the market. But here is the dark, unspoken reality of the retail trading industry. That 19-year-old guru with the Lamborghini? He doesn't make his money from trading the stock market. He makes his money from you. Let's look at the math. He has 5,000 desperate kids in his Discord server. They are all paying him $50 a month. 50 times 5,000. He is generating $250,000 a month in pure, risk-free subscription revenue. The Lamborghini is rented. The Rolex is a tax write-off. He isn't a master trader. He is a marketer selling shovels in the middle of a gold rush. And he is feeding you directly to the institutional algorithms. You open your laptop. It is 8:25 a.m. The stock market opens in 5 minutes. You see a massive tech stock trending downwards in the pre-market. You tell yourself, it's just a dip. It always bounces at the open. You want to make a massive statement today. You want to hit 20 grand so you can finally quit your part-time job. So, instead of risking a responsible $500, you take $12,000 of your capital and buy aggressively out-of-the-money call options. You're completely over-leveraged. You don't set a stop-loss. You tell yourself you will just watch it closely and sell if it drops. But because you are a tourist, you didn't check the economic calendar. You have absolutely no idea that at exactly 8:30 a.m., the U.S. government is releasing the new CPI inflation data. The institutional banks, the hedge funds, and the high-frequency trading algorithms are fully loaded, completely silent, and waiting for the data to drop. The clock hits 8:30. The inflation data is released. It comes in significantly hotter than expected. The stock market violently reacts. You stare at your screen. The chart doesn't just dip. It falls off an absolute cliff. A massive, thick, blood-red candle rips straight down through the screen, wiping out weeks of market gains in 4 seconds. Your heart stops. You freeze. Your brain completely short-circuits. Your $12,000 position instantly drops to $8,000. The fundamental rule of professional trading is to cut your losers quickly. Take the small hit and walk away. But human psychology refuses to accept the pain of realizing a loss. You start bargaining with the screen. It has to bounce. It dropped too fast. It's an overreaction. I'll just hold it until it goes back to break even, and then I swear I will sell. It doesn't bounce. The institutional selling accelerates. Your account drops to $5,000. You are physically sweating. Your hands are shaking so badly you can barely grip the computer mouse. And now, the true rigged mechanics of Wall Street begin to actively destroy you. When you buy an options contract, you aren't buying the stock. You're buying a contract with an expiration date. Wall Street designed options to act exactly like a block of ice sitting in the hot sun. It is a concept called theta decay. Every single minute that passes where the stock doesn't go in your direction, the contract mathematically loses value. And to make it worse, the sudden panic in the market caused something called IV crush. Implied volatility collapses. The premium on your contract evaporates into thin air. Even if the stock stopped dropping right now and just went sideways, you would still be losing hundreds of dollars a minute. The math is literally engineered against you. It is 9:45 a.m. The stock continues to bleed. Your contracts are so far out of the money, they are essentially worthless. A notification pops up on your screen. Margin call. Position auto-liquidated. The broker didn't even ask for your permission. They force-sold your options for pennies to protect themselves. The screen refreshes. The glowing green font is gone. Available buying power, $43.12. Your vision blurs. The air is sucked entirely out of the room. You feel violently sick to your stomach. You run to the dorm bathroom, grip the porcelain sink, and throw up your breakfast. You just burned $10,000, your entire life savings, the landscaping money, the sweat, the time, gone. In exactly 75 minutes, you're back to zero. You're completely, hopelessly trapped back in the matrix. The next 30 days are the darkest psychological period of your life. You are completely broke. You have to take extra night shifts at a minimum wage campus job just to pay your rent. Every time you wipe down a table, every time you sweep a floor for $15 an hour, the memory of that massive red candle flashes behind your eyes. This is the ultimate filter. 95% of people quit right here. They delete the brokerage app. They tell their friends that the stock market is a rigged casino. They accept their fate, fold their hand, and resign themselves to 40 years in a cubicle. But you don't. You realize a harsh, uncomfortable truth. You didn't lose because the market is rigged. You lost because you lacked discipline. You didn't know what you were doing. You were the liquidity. You were the prey. You cancel the $50 Discord subscription. You strip your entire trading strategy down to the bare foundation. You stop looking for a magic indicator. You spend the next 6 months doing the absolute most boring, grueling, unglamorous work imaginable. You study raw price action. You learn how to read institutional volume and liquidity grabs. You understand that the market is nothing more than a psychological battleground, transferring wealth from the impatient gambler to the patient sniper. Most importantly, you learn risk management. You hardwire your brain to accept that trading is not about predicting the future. It is a business of pure probability. You institute the 1% rule. If you take a trade, you never risk more than 1% of your total account. If you're wrong, you lose a tiny fraction. If you're right, you make 3%. You realize the mathematical truth. With a proper risk-to-reward ratio, you can literally be wrong 50% of the time and still print millions of dollars. But there is a problem. You have no capital left. You can't make life-changing money trading a $400 account. So, you pivot. You discover the prop firm industry. You pay $500 to take an evaluation challenge. They give you a simulated account. If you can follow their insanely strict risk rules, never losing more than 5% in a single day, and hit an 8% profit target, they will give you $100,000 of their actual institutional capital to trade, and they will let you keep 80% of the profits. This is the gauntlet. The pressure is suffocating. On day 14 of the challenge, you take a loss. Your heart rate spikes. The old you would have immediately revenge traded, doubled your position size, and blown the account. Your finger hovers over the mouse. You're sweating, but you close your eyes. You take a breath. You close the laptop, and you walk away. You take the small loss. 2 months later, you pass the test. You sign the digital contract. You're officially a funded trader. You're now managing a 6-figure account, and you didn't have to risk your own money to do it. Year 2. You're sitting in your apartment. The market opens. You see your specific, high-probability setup form on the chart. You calculate your exact risk down to the dollar. You set your stop loss. You set your take-profit order. And you enter the trade. And then, you literally walk away from the computer. You don't sit there sweating. You don't stare at the 1-minute chart praying for the candles to turn green. You go to the kitchen. You make a coffee. You take a shower. You have completely detached your emotions from the money. The money isn't real anymore. It is just data. It is ammunition in a video game. An hour later, you check your phone. The trade hit your target. You just made $3,000. You don't celebrate. You don't scream. You don't feel a dopamine hit. You just log it in your Excel journal and close the laptop for the day. Trading has become incredibly systematically boring. And that is exactly when you know you have become lethal. You request your first payout from the prop firm. A wire transfer for $12,000 hits your personal checking account. You have officially reclaimed the 10 grand you burned a year ago. But this time, it was built on a foundation of titanium. Over the next 3 years, the compounding effect takes over completely. You pass more challenges. You scale your funded capital to $500,000. Then $1 million. You aren't trying to make 100% return anymore. You are a professional. You only aim for 3 to 5% a month. But 5% of $1 million is $50,000 a month. In pure, liquid cash. You're 25 years old. You walk out onto the glass balcony of your high-rise apartment in Austin, Texas. It's a Tuesday morning. Down below, the city is gridlocked. You watch thousands of cars sitting bumper to bumper on the concrete highway. Inside those cars are people your exact age, exhausted, highly educated, and drowning in student loan debt, commuting to a corporate job they absolutely hate just to survive another week. They are trapped in a system that demands their physical time in exchange for survival capital. You look down at your phone. You just executed a single trade from your balcony. You made $4,000 in 20 minutes. You're entirely done working for the day. The financial matrix is a slaughterhouse for the uneducated. It is mathematically designed to take the money of the impatient, greedy gambler and hand it directly to the disciplined, emotionless professional. You took the ultimate punch to the jaw. You stared at a $0 bank account. But you evolved. You learned the language of the elite, and you forcefully bought your time back. Trading is not a get-rich-quick scheme. It is the hardest way to make easy money in the world. But if you survive the brutal education, it is the ultimate cheat code to reality. If you want to stop gambling, understand the deep psychology of true wealth, and finally, step completely outside the matrix. Hit the subscribe button. Welcome to Sterling Finance. We'll see you in the next one.